John Forwood from Lowell Resources Fund. What are the biggest emerging trends that are going to impact the year ahead?
I think the big one that has been brewing for some time now is underinvestment in the resources sector. We've seen that investment has hit a 20-year low based on adjusted for GDP by major resources companies. And that's something that has been falling probably for the past 6 to 8 years. And it's probably best exemplified by the fossil fuel sector. Now, we all know why they're not investing in their own business. There's a lot of ESG pressure, but the need for oil and gas is not going away, as has been demonstrated in 2022. But in general, the big fossil fuel producers aren't doing anything but investing in their own businesses. They have been doing share buybacks, paying special dividends, investing in other businesses, anything from, say, wind farms to solar farms to look more green. So there's a brewing problem there of supply, and demand, as we've seen, is not going away. It's not forecast to start falling for oil, for example, until probably at least 2035. So there's a real squeeze there. I use oil and gas as an example, but we've seen it really right across the commodity spectrum. The big miners, for example, were accused of being profligate with their capital in the boom in the 2000s, the mining boom back then. And since then, they've been very quote unquote disciplined, but that has meant that a lot of projects, for whatever reason, have not been developed. So, for example, copper, other metals as well. There's a supply-demand crunch coming down the track at us pretty quickly.
And what are your preferred emerging stocks or sectors?
Yeah, so at Lowell Resources Fund, we like to be a little bit counter-cyclical. So our main exposures are to gold and to copper. We do invest right across the commodity spectrum, so we do have a substantial amount of oil and gas, but focusing on gold and copper. Gold is certainly very much out of favor at the moment. It's off about 20-25% since its peak in US dollar terms in August 2020, but still a very handsome price of well over US $1,600 an ounce as we speak today. So gold producers, despite cost escalation, are still making money, but their share price is really out of favor. And we think that with the structural financial situation we're seeing globally at the moment, that the gold price will bounce back. And at that point, there'll be hopefully some real love for some of the gold equities. Copper, similarly, at the moment, the copper price is, around $3.40, $3.50 a pound. So that's down from over $4 a pound in 2021, but still a good price. But you're seeing the prices paid for copper equities, in particular, the pre-development companies that we focus on, are really the market's really fallen out of love with them. Not the only sector, obviously, but we're seeing some fantastic opportunities to invest in copper companies at the moment.
Finally, what emerging trend do you think everyone needs to know more about, and why?
Well, look, I've already touched on it somewhat, but copper in particular is forecast to have a major supply gap open up from 2025. Even today, we're seeing that copper inventories are very low. Visible copper inventories, I should say, in exchange traded warehouses are extremely low. They're normally measured in weeks. They're currently at around 4 days worth of global demand, which is not much. It's a wafer thin amount of copper in visible stockpiles. It hasn't translated to the price, and there may well be significant stockpiles that we're not seeing. But that's what we're seeing at the moment. But from 2025, we're seeing this demand supply gap open up, where supply is forecast to start to diminish from around 22 million tonnes per annum at the moment. And demand, due to the electrification theme, decarbonisation, use of copper in everything that is electrical, and that's that demand, particularly in electric vehicles, is going to grow and grow. And supply-demand gap by 2032, according to some commentators, is going to be around 9 million tonnes. So that's a 50% shortfall in the demand. That's including recycling. So there's a very scary situation that is forecast to happen. And I think, the market seems to have its head buried in the sand in relation to it.